for the MetaTrader 4 and web-based system that we have. And everybody here that's in the room should be a member, customer, an investor, whomever you may be, with the DEX network, either DEX Trader or DEX Indicators. Okay? Anybody in the room not one of those members yet? Anybody? I kind of see a lot of familiar names in here. You see about everybody? If you're not, just put in new down the bottom, and that's completely okay. We're not going to ask you to leave. We're going to ask you to actually sit back and relax. You're probably going to hear a lot of things that you're not used to hearing. You're probably going to find out certain things about the company that you'll like. And if so, head over to whatever system you desire, DEX Trader, DEX Signals, or DEX Indicators, and buy in. That's the only thing, that's the only advice I can give you from this point on. Yes, Brad Beckham. You now can start saying disclaimer at the beginning of them all, and I will make sure that, guess what? I have them all. All right. So tonight's webinar is we're going to talk about some money. We're going to talk about the process. I'm going to show you real live results. I'm going to show you, say this again, real live results. I'm also joined by our very good friend and partner, Mike Ficca. Welcome, Mike.
Hey guys, how are you? And before, real quick, I would like to congratulate Rob C. and Francisco that made elite members.
Oh, we should have told me that. We would have put their name up in lights.
Sorry about that.
All right. So next time we'll have to do that. So Rob C., you made elite. Congratulations. And Francisco made elite. These levels are not anything to sneer at. They're basically a congratulations and an accomplishment for each person that comes here and works hard as you get through those different levels. There are certain, I guess you could say, perks to the process, not just attaboys and pats on the back, but that you've arrived to a point of understanding. And we expect that you honor what we're doing with you, with not praise back to us, but more of to help others. Okay, sort of like a trade it forward, pay it forward kind of process. So keep that in mind. All right, let's jump right into here. Earnings and risk disclaimer. Most people sit and read this whole thing. The lawyers are always telling me I should. I've done it like maybe 10 times my entire career. I don't want to have one of those times tonight. So we're going to talk about education and trade assistance only. That's what this basically comes down to. Let's not be fools. You're not going to go out and throw $30,000 into a system and start spending a whole bunch of money all over the place, right? Mike might be a really beast of a trader, and you're going to try to emulate what he does, but you're not going to succeed at the beginning. You might be just like Mike. But listen, all results may vary. That's all it comes down to. Tonight's webinar, we're going to talk about a few things. Mike and I have put together this webinar this evening. Him and I sat on a phone call and a join.me screen share and went through the topics that we wanted to talk to you about. And why are we holding this webinar? Before I get started, the reason why we're holding this webinar like we are is because we used to have like these mixed sales training webinars kind of stuff. Once and twice a week, we're going to have these training webinars. And this is what it's going to be. It's going to be an overview. It's going to be maybe a little tune-up. You're going to get some more information of progress, how things are doing, what things are going. You'll get a questions and answers afterwards. You as the member get these because the money that you're paying, the time that you're investing, the things that you're doing, okay? And we're going to come into this. Some of the things we're going to talk about tonight are the challenge of testing. This is a big one, right? What's it take to physically test a system? Even not just from us, but even from you. Because remember, you're testing these things. You are figuring them out for you. There's no one program out there that goes, hey, it's the easiest thing ever. A big red button comes right in front of your face and you push it with your little finger and then you make money. You know, there's no system out there, right? There's no robot. Let me tell you right now, Mike, myself, Amy, Brian, lots of other people, Brad Beckham, there's a whole bunch of them that are in this room. You've all looked, okay? If you had found something, you wouldn't be sitting here. If I had found a robot by now with all the research that I do, guess what? It doesn't exist. I even tried building one. Guess what? It doesn't work. It all comes back to the mean of 50-50, right? Now, are there mechanical things that we can make things work? Yes, but it doesn't exist. The ways to trade. We're going to talk about price level. We're about 30, 70, 62, 38, 45, 55. These are a lot of numbers, and you're going to learn what they all mean tonight if you haven't already. You're going to learn and hear this very descriptive overviews of each one of these and what we're going to be doing. I'm going to be showing you some things that where we go to get these and how they work and what they do. Okay. We're going to talk about the idea and the concept behind no more tweaking. All right. No more tweaking. Little tiny things can hurt you here. You have to be very careful adding too much stuff on. So we'll talk about that. We'll talk about some housekeeping. Okay. Housekeeping. Hopefully you guys got that reference. You have to understand that in order to be a disciplined, logical trader, you need to track your trades. You need to get disciplined. If you're not disciplined, how the hell are you going to know when shit's going wrong? Okay? So that's what we're going to talk about in housekeeping. Ready for the big boy pants here, folks. When to go live. Right? Big boy pants, big girl pants, whatever you want to call it. Okay? Adult pants. I don't know. This is getting really creepy, isn't it? We're going to talk about when to go live. There's a lot of stuff in there that you're going to need to know. And we're going to punch you in the face with it tonight because it's no joke. You can demo, you can play in the kiddie pool for as long as you want. But once you get into the big boy pool, the big person pool, let me tell you, there's no messing around. Okay? Okay. Which also leads us to our next one, which is the incremental crawl. That's right. Before you start running around chucking greenbacks everywhere, you want to know how to get to a successful level of success. Okay, I know that sounds redundant, right? A successful level of success. But holy shit, you have to get to a point in trading that if you don't work your way up to it, you will fail. And I can tell you right now, I've watched it 100 times with people. When they come into programs like this, if you don't crawl to that process, you are going to fail, and we'll show you how that'll happen. We also show you what it means to get there and how to get there. This is very important. This will help you survive the drawdown. And then Mike and I got a couple last words for you. I know, Mike, power of attorney over the microphone. He's actually going to talk for a few, and he's going to let you have it right between the eyes with both barrels, and then so will I. And it's all for good. Okay, don't ever take anything in here personally. We're here to help you as much as physically possible and to get you to that point. Okay, some of you we talk to privately. Some of you we pull aside and we tweak your ear a little bit and we pinch you in the arm and we tell you, hey, listen, this is serious stuff. You got to pay attention. You know, it's time. And the final thoughts, you're going to want to pay attention. Here we go. You ready? Let's get off the first one. All right. I've looked at this program and I've decided that I wanted to make it work. And when I looked at this program, whatever it might be, it could be any program, I began to think, boy, this could work for me. And if I'm starting brand new, first day out of the box with no experience with a training system or a trading system, the best ways for me to test this, okay, because there's so many things that we got to test, right? We have to kind of sit down and go, how does it affect me? How does it work for me? How well do I understand it? And how well do I have relationship with those that created it? And how much relationship do I have with others that are using it? So some of the challenges that we faced in testing is that we needed data. Now, we just didn't need data from those that understood it and built it and kissed it and loved it and traded it with respect and sent it off to college. We needed to have relationship with those that were just learning it. You think we got that, Mike?
Yes, in spades.
Right. We have enough info for a lifetime. Now, when we originally asked the first 25, the big 25, the golden 25, first MDMers here, you all are MDMers, right? When we asked you here and you got into that first 25, you know who you are. And we told you, listen, you bought in, you paid your $97 to get here. We're going to give you a treat. You help us get information, we'll give you the system just for that $97. That's right. Your first time, it was your only time you had to pay. None of you expected that. And what we didn't expect in return was, one, you were going to give us a lot of information. Two, we didn't have one single person quit. Three, that information that we got us to our end success rate and our knowledge where we're at right now within 1 month. 1 month. I was thinking 6 or 7. Mike was at least thinking 10 years. No, I'm only kidding. But the idea was that we thought it was going to take a while. So we got there. We got there quick. We thought we were going to be in beta testing for at least a couple of weeks, but we were only in beta testing for 3 days, and it was working. So now it's working. Guess what? It's time for you who didn't get into that first part of it, who may, even if you did and you were testing, it's time now to get really into the working it. Because forward testing and demo testing are the final stages of any good system. And if you're testing it for yourself, if you're just figuring it out yourself, then there's a few things that you're going to need to do to make it even more successful. Okay, and we'll talk about that throughout the prizes. And what you're going to hear tonight, what you're going to see later on in this webinar, what you're going to feel from this company is the sincerity, the transparency, and the honesty that we all have one shared goal, and that's your success. Because your success means that it's a success, and that success means that other people can succeed as well. And if we can get as many people as we possibly can in here succeeding, that means the company itself will then be able to prosper into the future, not just by your memberships, not just by your contributions, not just by your investments, okay, but by your trust and sincerity within the company. Because we're not just building a trading company, we're building an investment firm. So what a grand plan it is when all of you and all of us begins to build these secondary systems out there, these marketing firms, and whatever we can think of, we can build from that level. So get excited that you're part of this. If you have elite and senior by your name, you're 10 steps up in the head of the game, right? You worked hard to get where you're at. Okay, so let's get to the next one. Now, for most of you, this is a tough question. And before I show you the answer, I want to hear from some people in the room. What is the most powerful tool in your trading arsenal? What do you think it is? Some of you just blurt out some things in the room there. Chi says patience. That's a good one. I like that. Gee, I might put that on my t-shirt. I'm a patience trader. Kurt says consistency. Another great one. Tim H, following up, didn't disappoint. Discipline. Rob C, there you go. Discipline. Mike C, there you go. The C's got it. Discipline. That's pretty good. Vivian says yourself. No wonder Vivian's an ace, right? She says yourself. Those are all right. These are all perfect. Now for you, that might be, Rob, he says, Mike Pickett, brown noser. You little brown noser. That's okay. I like brown nosers. They're cool too. All right, listen. I'm going to throw something at you. It's going to throw you a little bit of a curve here. That all those things are correct, what you said in the room. There's no bad answers there. And no, this isn't like a participation award, okay? Because you were all wrong in what I was trying to prove here. But you're all right that in overall, the most powerful tool for you, okay, what you all just listed, okay, is very important because those are the things that you value, and that's what's going to make you a success. But let me show you what truly the most powerful tool in trading comes down to. You ready? It's going to blow your mind. It's called money management. Now, money management, let me jump back here just for a second. Money management is very important. By the way, Mike, I have my touch screen.
Missed that.
So,
you missed that.
I know I missed it, right? Oh, my baby. I don't know. I love using my finger to do the touch screen. Okay, so listen. Money management is so important into trading a tool, okay? Because no matter what system, can anybody trade with the clock on the wall? Of course they can. It just comes down to managing your money well enough, when to get in, when not to get in. Can anybody trade straight from at the money? Yeah, absolutely. But if you don't manage the money properly, guess what happens? You fail, right? Money management also becomes a little bit about what? Risk management, which is also money management. See how many ties in, right? What's the whole thing about? Money. What do you do with the money when you're trading back and forth from one bank to another? You'll manage it. You get where all this is going? That's the most important process of the entire solution for you, is knowing how to manage the money. How many of you seen when you're in there trading, right? You got one guy, he's got 61% success, but he's still up $126. And you got 75% success, and you're like, oh, I'm killing it, but you got $4. How many of you have seen this? Okay. What do you think the difference is here? Money management. 61% has $126 left over and has $126 in profit. And you only have 4. Maybe because he's getting in at $32 success or $38 profit, and you're still doing 25s. You get where I'm going? Okay. Now, those aren't actual numbers of what you could have, but I'll show you inside what some of them look like when we look at the other spreadsheets and the other journals. So, having this knowledge, doesn't it make sense? If this is one of the most important values of trading, then why don't other companies focus on it primarily? How many people in the room have ever met a company that focuses on price trading? You ever heard of this term? Called price trading. And not indicative price, we're talking about market price, and we're talking about Nadex. None, right? Hardly anybody will. Why? Because it's a misnomer. People think that you have to know which way the market's going in order to get a good deal. People think that it's all about price action. It is. It really is. It is about the movement of the actual money. And why everybody's trying to throw on fancy indicators and fancy price action level indicators and candlestick evaluators and patternizational networks and all that kind of stuff. We forget no matter what kind of strategy you have to say yes up and or say no down or true or false or bid or offer or sell or put or call or what have you. We forget that it always comes back to the money. All right. So let's go look what that looks like. The different ways to trade. Well, one of the most popular ones that I came up with a while ago was called price level. And this is going to look pretty funky to some of you, okay? Because price level trading is sort of a little bit of using the support and resistance. Some of you have already started using that, right? Anybody using support and resistance indicator from DEX effects in there? From DEX indicators in the system? Yeah. You're already using sort of a concept of price level. Using some of that information that you have at different levels, you can use to kind of sort of put the actual statements at a certain price. And then once you find that level that support and resistance kind of matches up, you're looking for what? This is called structure. And the structure of how price evaluates begins to fulfill whether or not there's a match of a statement that's on Nadex. Okay? Let's see if we can fold this all together in just 1 second here. I'm going to show you a few things here. I'm not even going to put on, let me see if I can chart a window here. I'm going to use the Trader 4 for right now, but I'm going to zip over to the 5-minute Trader WB in just a second. But I want to show you this first. Let me zip over here, go in here, okay? And what this is a price chart, right? This is a price chart that is, I don't know if you can see some of it. My stuff's a little bit all over the place, right? Here you go. All right. This is the Euro USD. We're going to put it on 1 minute because we're talking about 5-minute trades. Okay. I'm going to back out here just a little bit, and you can kind of see how fast this market goes up and down, especially if there's news. Stuff looks really crazy. I'm going to look for a stable part of the market so we can play with that here just for a second. Let's see if I can find just a stable. All right, here we go, right? Now this is all just speculation. These aren't real signals that came out or what have you. I don't want to show you those just yet. I want to show you just a part of the process, right? So we all know that on Nadex, there are 5 actual statements that come out on the 5-minute system, right? So in these 5 statements, when the second of that minute, so 7:25 Eastern Standard Time right now, happened right now, in just a couple of seconds here, in 56 seconds actually, you're going to have a trade available, right? You're going to have something that's going to come up, possibly. Now, when that comes up, it's always going to appear that the indicative price is going to be at this middle one, right? So 75.67. This is truly at the money, right? This is the center statement. We're going to refer to it as the center, okay? We're going to refer to the one up or the one down as just that, one up, one down, okay? And we're going to refer to the ones all the way on the outside, or we're going to call them the fringe, okay? The top fringe, the bottom fringe, okay? So when you're in the middle, you're going to go either up or down, or sell, or bid, or offer. Or if you're going to go to the one up, one down, okay, so one up or one down, or top fringe and bottom fringe, okay? Very easy to understand, and that's what's going to happen. As you see, 75.66 is the actual trade number, right? Really close to 75.67. So they put 75.67, they round up a little bit, and give you that as the trade that comes over. This is pretty powerful to see, because when you see this, how this unfolds, you can automatically start to know which one I can go for. So we're going to say with the AUD USD, let me jump back over here, see if I can get the AUD USD over. I'm just going to drag that over just like that. Okay. And let's just pretend that a signal had just come out, right? And let's just say it's a sell signal. All right. So I'm going to put an arrow on. I'm going to do something like this. I don't know if you can see that little tiny arrow that I just made. See if I can make it a little bigger. No. Go figure. But let's just say that that's the signal that just came out. All right. Now, in price level trading, I want to look for, because I'm not even going to look at support and resistance, right? I'm just going to come back to here. I'm going to grab maybe a line, right? And I'm going to find some connection. I'm going to find structure. And if you see, I immediately found structure just by the last little hill that happened previously 5 minutes ago, because the structure is very simple to see. Structure right there, of course. Look at that. Almost perfect. It went all the way up and touched the line. And then back here, just looking left, just by looking left just a little bit, I'll find structure. By macro out just a little bit, I'll find even more structure. One there, one here, one here. If I go back over, I'll see more structure. You know, so this is a pretty good number, and that's 75.67. You seeing the relationship now? Seeing how important it is to find structure? 75.67. Now, what does this mean? Well, you could go back up to where it was and say, I can go to 75.67, but because the indicative price and the spot Forex price has two different pricings on it, indicative is a little bit lower because it uses indicative price over, or the spot Forex, which is here 75.67. So when it's a sell, you want to add 2 pips to that. And why is that perfect? Well, 75.69 sitting right there. Now, if I hadn't been gabbing the entire time on price level, I would have just simply clicked the button, put one contract in. Because it's a sell and I want $30 profit, I'm going to put $30 here. You see how it says $30 profit right there? That's the best way to know if you got it right. If I put $70 there, guess what? I'm not going to do it right? Even though that'd be pretty cool, it's still not right. $30. Now hit place order. Okay, I'm going to hit close there. Why? Because this is my live account, I just noticed. Sorry, Mike. That's Mike's live account.
I didn't want to say anything. I did not.
That's my live account. Go figure. Okay, so listen. So that's basically what you would do. You would click on that. You would set a working order for the one a little bit higher, because remember, you're going a couple pips higher. Now, if you were using that and the price was already moving, and if this was a buy, you know, what would you do? If this was a buy signal, what would you do? You would go to the last little hilt that you could find some structure on, right? Maybe down here, 75.64. You could come up 2 pips, 75.66, and guess what? Look at the relationship, 75.65. You see, it's usually, price level will usually sit around the one up or one down. Sometimes if you had a lot of movement very quickly, you might get the fringe. But again, trading at $30 and $70 is trading the price so far. Okay, we have a direction on which side of the center we should be on, and you're trading from that level. Okay, so that's one way to be able to trade with price. Now, if you do have any questions, I'm gonna save them for little bits and pieces during the time so you can ask your questions. But for right now, keep all your questions, and then we'll get them answered as we go. Now, trading with $30 profit margin, okay, $30 on the bid side, $70 on the offer side. Okay, after you get your fees taken out, whatever the price is going to be, I'm not going to go into that because I don't want to throw too many numbers at you. You're going to have enough numbers already. All right. There is another way to trade from doing what we refer to as standard straight ATM trading, right? Now, price level trading has a success rate, okay? And that success rate, I can't give you. And for when I used to do 30-70, I did very well because I used other little tiny things. Like sometimes I would use a stochastic, sometimes I would use other things that made me feel good when I got confirmations. I'm not going to tell you what they are because what's make me feel good. There's some of you that like to use certain small things, right? But don't get dependent upon them. Okay. The more things you put on, the more indicators you put on, the more different rules you get that you make for yourself, the less trades you're going to be able to do. And sometimes they're going to keep you out of the good trades and keep you into the bad trades. They're going to keep you out of the good trades and keep you in the bad trades. So you have to follow the system first. And as you get wiser how these things work, you will then start to be able to add certain things for you to help keep you into the good trades and out of the bad trades. Okay, but for now, using the program on one of these systems is going to be very important for you. Okay, and we're going to talk about that here in just a moment. So using price level is a safe way. It's a low to medium risk at times. Right? Of course, not trading news, not trading certain times that we have down in the rules, those particular things. Okay. Now, the next way we want to talk about is a form that's going to spark off a whole other generation of trades. Okay. And again, John, I'll answer some questions here in a moment, but I won't be answering too many during the program here. ATM trading is a very powerful way to trade in a price level kind of what we call price trading. So, and it has its own level of success that isn't very high. It doesn't need to be very high, right? And you're going to trade this manually. You're not going to trade it with working orders if you're going to trade this way. Do not trade from the middle with working orders, okay? Because they will be met. If you set a working order from the middle, it will be met. I can tell you right now. When it first comes out, if you set a working order from the middle, it will be met, but you're cutting your money out. Trading from the middle, trading from ATM for when it first comes out is really about looking at a few other small things to see if you're on a trend line, to see if you have some reaction, if there's some other variables that you're not looking at. Maybe you're using RSI, maybe you're using stochastic, maybe you're using some other things. These are the secondary indicators that make you feel good, right? This is what we were talking about. And we'll talk about some of those in other trainings. But for the most part, trading ATM is when the signal comes out and gives you the feel for a direction, okay, depending on which level, which way it's going. You're going to go to the page. You're going to go to the middle one when it first comes out. You're going to see, is it under $50 profit margin? So on the bid side, you want to see it under 50, and on the offer side, you want to see it above 50, usually by $2 or $3, right? Usually by the amount that I have stated here, which is you want to see it between $35 and $45 profit, right? And why is that? Well, simply enough, if the market's kind of going like this, right, and when the statement comes out, that line's right here, right? And if this thing starts to go up just a little bit more, and it gives you an up signal, if the process kind of drops back down just a little bit right after the signal comes out, and you have you're not going to be doing working orders, and it gets really super close to it, this price might still be OTM, right? It still might be above because you're trying to put one in above. So it might be something like $48 here on the actual market price, which would be an OTM, an out of the money kind of mentality, right? Even though that it hasn't crossed the line yet. But because there's so much opportunity with it, the market makers might give you an opportunity to get in OTM pricing. So, and then what happens, right? Then if it happens to go up and you can actually get this pricing, it's pretty good. But this is a very high risk trade. Don't be fooled by how much money's there, okay? That's like the cheese in the trap, okay? So once this thing starts to take off just a little bit, you want to see it about, $45 to $35 profit margin in here, because that means that this is a good level to work with at ATM trade. All right? Because it doesn't have to get too far at this point to get into what? To get into profit and for it to go. We call this the premium zone here, $45 to $35. All right? The reason being is that what happens if this trade loses, right? If I got in, let's say I got in for the buy side, right? And I got in for $55 from this side. Okay? I got in, so that's a $45 profit. If I win, I win 45 bucks. If I lose 55, right? And that's one trade. Right? This is trade number one. If I do trade number two and I win, what do I win? I win $45, right? But I'm still $10 in the hole. So if I win one more, now I'm $35 up. See, so it doesn't take much to win over your losses from this level of trading. But keep in mind, trading ATM is a high risk trade. You're going to have between 55 and 65% success rate. Let me say that again. You'll have a 55% to 65% success rate. That's why you can see some people out there that trade the 45-55 working order method that I'm going to show you here in a few minutes that are still could be at like 61% and be cha-ching, making still money, right? May not be a lot of money. You might be doing a lot of work to get to that money, but then we're going to talk about CVG, right? So keep that in mind. That's another way to trade the process is using ATM, using a $35 to $45 profit on the contract, manually purchased, right? You're not using working orders at this point, right? Now, before I get into this, I'm going to answer John's question here. What indicators do you suggest? There's a couple of them that you can start to work with. One is a moving average that you can put on the chart. But again, remember, these are only, a moving average will really help you understand a few things, but the support and resistance from DEX indicators, if you're using indicators, you can use the support and resistance free indicator from DEX indicators. You can use the DEX MACD to help you get to understand that process. And those are the two that I really would suggest for anybody, and possibly a stochastic. Okay? And you'll see if you do the Trader's Mind series, you'll see the two variables that I like to use. But remember, don't add them all and expect you to be able to filter in the gold. Okay? That's not how it works. What you really want to do is to be able to find one of them that gives you a little bit of comfortableness when you're getting into a trade, to help navigate what the trade looks like, to see how well is it going. Not to scalp out. Remember, these numbers are very important to keep untouched, right? Could you create a scalping program of getting in and getting out? Mike, what do I tell people about a scalping program? What does it have to be?
If you're going to scalp on the getting out on a for profit, you should scalp out on a loss as well.
Correct. You have to be balanced. You have to be balanced to be able to scalp in and be able to scalp out. If you don't understand how to get out of a trade, what does a trade look like when it goes bad? If you're asking that question next, guess what? Don't scalp. Just deal with the numbers. Just deal with the freaking numbers the way they are. Some of you can say, well, I don't like to be 65% because I'm not making a lot of money. Not if you're trading one contract at a time. But later, you'll see about CVG. And when you get about the knowledge and the feel of this process, this is what's going to set you apart. This is what's going to put you in that position of being a professional trader that's going to take you to that level of success you want to be at. But until you understand that, until you feel it, until it's ingrained in every morsel of your body, you're going to fight that success. I'm here to help you not fight as much. You're still going to have to fight, but you're not going to be doing it alone. So let's get to the next point. All right. The second way to trade, we're going to continue this, is doing an ATM working order price trading. I know that's a mouthful, right? We're going to use an ATM mentality, okay? The price trading of ATM at the money, but we're going to use a working order to fill it. And no, not from the center. This strategy has a powerful money management overlay and takes very strong resolve, what we were just talking about, in the ability to be able to handle the outcomes. I'm going to pay this as a high respect to Mike Ficca, because Mike Ficca trades one of these systems, and he has come a million miles. When I hear from him go, "Hey, I'm done trading for this afternoon. I'm going to finish trading up this evening," and I already know at that point I can hear no animosity, no worry in his voice, because I know he's lost a couple in a row. And he doesn't even think about it anymore. It's part of the process. Okay. Now, we'll go over the levels of price trading and all that stuff here in a second. But remember, you have to prepare yourself to do this level of work to be able to get here. And you need to succeed at something. You need to get to your gross success rate. This means how many trades you're going to have to do, Mike, to get to that, you think? Mike?
Oh, yeah. How many trades for gross success rate? I'm sorry, I didn't know you were talking to me.
Yeah. How many think you're going to need to get to that?
At least 200.
At least 200. I would almost stretch to say probably even a 300. So even if we said 250 to meet in the middle, guess what? That's a lot of work. May take you a couple of days, may take you a week, may take you a month. Now, in order to get there, you're going to have to follow some rules. We're going to talk about that here in the discipline side and housekeeping and all that stuff. And you're going to hear about this. But once you get there, what a powerful system it is. Let's go have a look. All right, let's throw some numbers at you now. Okay. Now, you remember that we were talking about the statements, right? One in the middle is the center, one up, one down, the fringe, top fringe, the bottom fringe, right? We keep that terminology solid. And so you'll remember what it is. Use it in the rooms. Hey, I just traded a top fringe. Hey, I just did one up. Hey, I just did one down. Oh, I'm center trading. Okay? So people know, right? Use it amongst yourself. Allow yourself to absorb that kind of terminology for yourself so you can see and hear it from others, and you'll understand how each person's and what they're doing. You'll also know by the way that they trade. You'll also see in their spreadsheets, and you'll see when they share in the rooms what their numbers look like, and you'll begin to immediately know what kind of trader they are. Isn't that wonderful? Isn't it wonderful to be able to see and feel and know that your compadres, the people that are in there working very hard, you know what struggles they're going through, because at what levels they're trading at. They're trading a little higher risk. You can almost start to get a mental picture of how this person works. Now, we need to set the working order. And that's where this is one of the most difficult parts about doing trading on Nadex, is being able to set the working order. But in all actuality, it's really kind of easy. When a trade comes up, simply click on to get the statement. All right, so this is like in the last couple seconds, there's no statements available. Okay, wait, here we go. Click on a number. You put in the amount. Copy the price. You highlight the price. And remember, we're going to be using, in this particular case on the sell side, $32. Once you put in the number, you can immediately see if you're right, if your max profit matches what you're supposed to get. If you did $68 here on the sell, you see what I'm saying? It'd be the same. Oh, sorry.
62.38. Yes.
62. You immediately see it's wrong because I have it on the sell. But if I put it to the buy, look what happens. It gets over the right side, right? And you would then click OK. Now that's going to put it down in here in your working orders area. I should have had a demo count up so I can done a bunch of these for you. But you're going to see in a lot of the trading that we do when we are out there. I had some problems from this computer when I was getting into my demo and couldn't remember all the numbers and didn't know until last second. My folly. Okay. So when we come into trading with this process and the numbers that we're going to be using, we're going to have different things that we're going to be able to do. So a mid-risk trade level that we're going to be using on a working order is something that Tim H. and Mike came up to work with together. Okay. Mike was using a little bit lower variable, and seeing Tim was doing a 38.62. And when Tim H., I think he's in the room here, right? Tim H., yep, senior level trader, wonderful person, okay, came up with both of these strategies right here. Believe it or not. worked very hard to show them. He's one of those kind of people that took it to heart when we asked for as much help as possible. And he really started to try to find out what was the best line to use. Started testing out 3862, was doing very well. Just didn't come up with a number out of his head. Started out at a number, worked his way to this number, then worked his way to this one. And then I started developing strategies and forethoughts and mentalities behind each one on when to trade and how to trade it and what to do and how to do. Okay? And this is what it really comes down to. Is this 3862, right? 38 for the sell side, 62 for the buy side, is the mid-risk level that we're going to use for the one up or one downside only. And you'll find out here in a second, when do you trade the fringe? And I'll tell you about that here in a second. But for now, we're just going to use the one up and one downside. Okay? So 3862 is very important to know, because what happens on a 3862? Okay? If I win, I'm going to win $38. Yay. If I lose, I'm going to lose $62. Right? So the amount of the ratio of how many wins to losses you need to recover is what? 2 trades. So let's just call this an R2 trade. Right? So my risk management from this, saying I'm only doing one contract. If I lose, I'm going to lose $62. And if I do, I need 2 trades of 38 to get over 62, right? Which is what? 76 bucks, right? And after fees and all that stuff, but you guys can figure that stuff out. But I'm showing you real money here, right? 1 to 175, right? Right around in that area, Rob. But for our case, we're just rounding in an R2 because there's no way I could do 1.75 trade, right? So keep that in mind, that the availability here is that if you do 2 just like this, you're going to get back and you're going to be in the plus 14 bucks, right? Immediate ROI, okay? Positive ROI directly from 2 trades. So yes, 1.75 would put you with 2 trades in immediate ROI plus ROI. And that's very important because you want of the best system ever, okay? Of 4 to 1, 6 to 1, 8 to 1, all that stuff that you can get in Forex, you're never going to get into an 8X. You're never going to get a 2 to 1 ratio, right? Why? Because it's 50-50, right? Unless you're trading OTMs and you're doing like $10 or $8 on the other side, and then you got a 10 to 1. But come on, guess what, folks? You need to do about 300 trades or 100 trades at least. Be able to get to that. And I don't know in too many progressive suggestive systems out there, that they can give you signals for OTMs. You might as well just hit the fringe on the opposite end and just keep trading that one side, and hopefully one day it'll get picked up and win. There's systems out there like that too. So why would you trade 3862 over maybe 45.55? Well, can anybody in the room tell me why you would trade 38.62 over 45.55? Lower risk, yeah. Lower price risk, right? You actually have a lower price risk, but a higher chance of losing. That's right. You still need 2 trades to make up your thing, but now it's at like 1.25. Rob C, maybe you can calculate that for me, please. But the concept here is that a little bit more higher risk. Now, sometimes your curve, okay, the curve of making the trade happen, maybe this is the 38.62 here, and you got the 45.55 here, okay? And this kind of has a steady, inclination or incline of trades, right? And the profit margins, you got to keep a pretty high success rate. You got to be 63% and higher, okay, to get good numbers, right? Here, okay, because you're at 55, you only need 56% success rate. right? So you only need 56% success rate. So you might have something like this, you know, and it might be a little bit less in the curvature like this. I'm sorry, I did that wrong. It is 56%. You might, but you're going to have things like this, okay? Because what happens is that you get sharper losses, right? Because it's going to lose a couple of times, but your wins are going to put your, even 3 or 4 wins are going to put your money way up, right? And then you're going to have a couple more losses. You might have 4 in a row. Well, here you might only have 2 in a row. Here you might have 4 and 5 in a row. I haven't seen 5 in a row yet, but you may have 4 in a row. So it's going to give you a real sharp jump down, but then your positive ROI is going to go up, right? Why? Because you're doing this. And I'm going to show you journals from both types of people in trading. You're going to get an understanding of that. If I show you your journal, don't worry, I'm not going to embarrass you. I'm not going to insult you. But I'm going to tell you right now that if you're trading one of these 2 levels, you're way ahead of the game. The difference between the 2 on either systems really has nothing to do with the system itself. It's all about one thing, and that's you. You have a preference. Trading one way only will be the only thing that will gain you success from this type of trading. And that brings us to this. And I think I'm going to let Mike kind of go over this process with you so he can kind of explain to you what this solution means to him and to what all of you need to hear.
Okay, guys. I'm trading from the 3862. Okay, so whatever one you're trading with, this will also apply to you. But this is what I'm talking about. We've given you the tools to be successful in this, and thanks to you guys and all your trades, we've come up with the final. And this is what we're talking about tonight: the final process. 3862. You trade one up, one down. $38 on the sell and $62 on the buy. We're making sure that our stochastic is all 3 lines going up or all 3 lines going down. Okay, you're looking at your
Mike. We didn't even go over stochastic.
Okay.
Did you do stochastic with them in there?
In the room, yes.
Okay. All right. So there are some things that you're going to be using. Maybe some of you aren't using a stochastic yet. Okay. So you
I'm sorry. The Dex MACD. I apologize.
Okay.
I keep calling it stochastic. You're making sure all 3 lines are going up or going down. You don't need anything else. Don't overthink the trades. Okay. And that's been a problem in the last week or so. You guys are overthinking and not getting into the really good trades. So we might be trading the same ones, or I might be picking a different one than you guys. Okay. So you can't really overthink it. You see the signal. You look at the arrow, you look at the MACD, and that's it, period. You get into the trade. That's all we're talking about here. Do not add a stochastic. Do not add whatever else, don't add lines, don't add anything. We are giving you the tools to succeed, and you shouldn't tweak them or shouldn't use more or less. I mean, we worked very hard on this system. So just what we tell you to do. I mean, you want to do it. You want to, when it's your money and you're going live, you want to do something different, and then you come back to us and say, well, it's not working. Well, did you follow our process? That's all we're saying. Follow our process. Trust the process.
One of the things Mike said about adding lines, yes, the support and resistance, things that you're used to using now. Another big part of no tweaking is don't be testing each system within itself, right? So pick one, work just it, right?
Correct.
Don't say, okay, I just did 3 68-20 or 68-32s and I didn't win very much. I need to try the 45-55s now. No. Do something and take it to a level that you get a good success rate from it. If you don't have a success rate from it, if you don't have, how well is it doing, and it's not working for you after 200 trades, then maybe abandon it and try one of the others.
Mm-hmm.
Okay. But if you can't make 62-38 work, then you need to sit down with us and find out why isn't it working for you. Maybe it's your times of choosing or when you're trading or what have you. Mike's perfectly right with saying that you're overthinking, but all of you will overthink at a time. Even I do.
I do.
Okay. We all do. Analysis is paralysis. You're absolutely right, Dave. But the true confidence that you get by adding and just working on one thing at a time, you start with the true system. You then might be able to understand a little bit more. If you put the Dex MACD on and the support and resistance lines, you just have them on there, you're going to get some absorption. And I know this sounds weird, right? It sounds like a bunch of mumbo jumbo, Tony Robbins-ish kind of mentality, right? If you see it on there, you're going to feel it. No, it's absolutely true. You will begin to see the relationships between support and resistance. Because what is it? That's a relationship of structure. What am I talking about structure? What I showed you here. Why is it so important about structure on just a 1 minute chart? Well, easily enough, you'll see that all these levels are different psychological levels, no matter what level they're at 1 minute, 5 minute, 15 minute, 30 minute. That's why you can go to a day one chart, okay, which is a daily. Each one of these bars is a day, right? I can put a big old line in here and watch what happens. When I go down to a 1 hour chart, look where that line's at. Kind of lines up with some other structure, doesn't it? Some sideways structure that happens is coming up, coming down, coming up, coming down. And if I back out pretty far, you'll see how far back this structure goes over and over and over and over again. Why? Because these are levels that people trade at. These are price levels that people trade at. And when you find those relationships, when you find them in the support and resistance, see, like this one right there, it's this easy. I'm not kidding you. It is just this easy on how to find as many relationships. Look at these. Boom, boom, boom. Right there, right there, right there. And when you start finding these relationships, just having them on the page, did you just not learn something about these levels? Right. Most of these levels, once they're broken, they always seem to come back to, right? Broken, come back to, broken, come back to, broken. And then here's another level it gets to. So once you start understanding what's some of the tools that you have on, just keep them there. You know, just maybe the one or two of them if you need them. If not, trade just with the arrows and trade with the mentality that if I'm not trading during news, I'm just going to trade this level when it comes out. And that's the direction I'm going to go from the fringe, or no, from not the fringe, but from one up or one down with 68.30, 68.32, or I don't know, 38.62. I always mess that up. From 38.62 or from the 45.55. Now, the difference between the two, like we explained, of it only being just a little bit of a difference is that mentality, but is also it will begin to formulate how your trading style will become. A 60 to 38 trader is more. You get a little bit between price level trading and ATM trading, right? You get a little bit more into the at the money trade, but you get it for a little bit of a bounce level, right? Because what happens when you trade right from the middle? So you got down, you got up, right? Right? And what happens when you trade from one up, one down? You get this happen, right? Something like this, right? And if this was expiry from this point, you might get something like this happen, to where it comes out, you put a working order here for a sell, and it bounces off of that upper level, comes in. Because remember, if these are psychological lines, if these are relationships and lines, and you find them and they're there, and you're trading from that level, look what happens. If it gets filled from that point, it keeps going on. But what happens as well? It does that, right? It goes right through your line. Now, sometimes you can finish over and you still win, but sometimes you finish up, and that is where the drawdown is. Okay, but when you're trading, let me see if I can back this up even further. If the signal comes out for a sell and you're using this top or this one up, okay, and the market kind of goes up at 68.32, the price needs to get right about there in relationship. It doesn't have to get like all the way on it and then start to bounce away to get filled. But if you're using 45.55, it's got to go a little bit closer, almost to the event horizon, and then go on to be a winner. Okay, so keep that in mind. There is a tremendous amount of information from doing either side, but you just got to do one long enough to get that information. Right? Does that make sense? See if I can add Mike in. There you go, Mike. Okay. So we understand, no more tweaking, that the rule is mostly about getting to the level of trades that will host and hold your GSR. That's your gross success rate, right? Because we want you to be able to get to your GSR so you can apply one very important thing, and that's CVG. Consistency plus volume equals goal. Okay, and this is going to be a very important lesson for you to be able to learn. All right. Let's talk about housekeeping. This one is going over. And I want to say thank you for all of you because I appreciate you being here. Housekeeping is very important because it has, in order to get organized, okay, you have to kind of know what all the components are, and that's very important. You have to be able to keep a journal, right? Most of you are keeping a journal. If you're not keeping a journal, you're not really taking into the serious effect of how well a journal can work for you. I'm going to go with Dextrator. Let me get in Dextrator real quick here. Mike, how important was a journal for you when you first started trading with it?
Oh, it made all the difference in the world to see where you're messing up. You're seeing where you can improve, or is the system you're working at that time working or not working? Where
right.
You can, it's vital.
Right. And how important was it for you to have a journal? What could I do with your journal?
Well, you could see how I get in and out of trades. Are you trading the same way I'm trading? Are we trading the same pairs? I mean, it's invaluable. I learned from Tim H.
Right. It has so much information in it, from how fast you get in. If I can look at your stuff and see if it's a working order or if it's consistent value or got in at the money, you got in, past that and all that stuff, right? So having a journal system. Now this is, sorry for the bells, this is the 5-minute, you're going to have to get used to that. But this is the 5-minute MDM Wb system where we have our forest square, you have all the arrows, you have each individual pair asset on its own chart. There's some new features in the system, which I'll go over here. Oh my God, it's beautiful. I'm sorry, I'm seeing it for like the second time. I love it. But let's get over to the journals and kind of look at this, right? Mike trades a 62. I'm sorry, yeah, it's a 6238 system, and this is from some of his old stuff in here. This is his current stuff. Let me scroll down here. As you see, 6832, and you'll begin to see this becomes rampant, right? It's like it's all over the place. Now, before I get into show you some of these little tricks, just let me show you something real quickly for all you live hounds. This is Mike's live page. You can see it on the tab over. He uses a demo page when he's training with some of you and he works with some of you, and he uses his live page when he's trading live. This is, I told him to go back and trading live and start broadcasting this out, and look at this. Beautiful. Great job, Mike. Look at this. Losses 2 today. And he goes, Max, I'm not trading until this evening after the webinar. And I'm like, okay, buddy. I already knew he lost a couple. I know, Mike. Okay. This is my live page. Look at that. All right. Now I'm trading a little bit different mentality here. I'm trading 45.55, right? And I made a boo-boo on one. You had him for 57. And I made a boo-boo. Okay. So, but that's me. But I'm not the only one. So let's talk about housekeeping. One of the first things you're going to notice about Mike's is that it's nice and crisp. There's a lot of, there's spaces in between the trades. They're all organized. They all have greens for wins and oranges for losses. Okay. We're using our copy and paste code here easily enough. Where can I get this code? Simply do this, right? Come to Mike's page, go to template. You're going to copy this. You're going to select it. You're going to hit copy. And very simply, we'd go back to your page. Let's see. I don't think there's anybody in here who doesn't use it. There's Chi. I know he uses it to a degree. He uses his own variant. I don't think there's anybody else in here. All right. So here, I'll do this. I'll go to mine. Now, one of the things that we ask you to do as you're pasting and copying your information over is to make sure you separate it. Don't put it in one big giant chunk of information. Okay. Take the time to separate it out, learn what all the different things are, you know, what the settlement is. There's a lot of training inside. If you want to make a new sheet, now remember, this is a spreadsheet. This is the document itself, right? But these down here are called tabs or sheets. If you want to make a new one, like if you are, why you would make a new one of the big reasons why is because you're going to trade in a different style. Or maybe you want to have your days separated on here, but it's going to make for a lot of days. You can put them on here and we can scroll down. Trust me, it's easy enough for us to do. So keep all your days onto one. Maybe make each tab a month or what have you. So if it's a different system or what have you, don't overthink it. Put it all, if it's a different program completely you're using, like the 4555 or 6238 like I have here, do something like this. Like I have, like here I have the indicator series and I have the WB series that I use. So you just click that little plus sign there, right? Add a sheet. Okay. Now over on Mike's sheet, I copied that that top header there. I right click now and I hit paste where I want it to show up at. Okay. Now one of the things you can add on too. Now remember, you're going to get this video in an email. Amy's going to send it to you in an email. We'll have it all downloaded and put up there for you. And you can watch this thing and get to this point of it, right? I might even isolate this video for all of you that are watching, and it'll be in a little playlist for you to be able to go to each one, be able to see, okay? You're going to select the fourth row, go to View, go to Freeze, go to Up Current Row. You see that? Select the fourth, go to View, go to Freeze, go to Up to Current Fourth Row. And what this is going to do is it's going to freeze this fourth row. So when we scroll down, we can see what your success rate is, and you can still have the information on how well you're doing, right? That is a lot of bells.
Mm-hmm.
Okay, so like I say, I don't do many, but when I do, I get in great. Well, let me show you now. So Mike, let's jump over and look at what the the 4555 and the 3862 systems look different on two people that are trading it. The first one is, let's go to Mike's live account. And you can see how the standard is, right? 6238, 73%, 73.91%, right? 23 trades done. Not bad, right? Now let me show you something else. Here's Tim H., one of the co-inventors of this process. Okay, let me see if I can find his sheet. What's my sheet for? See, 59%. If you fall under it, and this is with him testing some other things in there. I don't think his is in here. Give me a second. Let me see if I can go find it just real quick.
Amy's got a point also. Please don't keep sharing the sheet with us. If you add to your original sheet, it'll show up automatically.
Absolutely. Keep adding to your sheets. Don't keep adding. Don't keep adding to the system. Don't keep adding sheets to us, new documents to us, right? Because that's just going to waste your time and our time, and we got to put them on that company in there as well.
He said week of 312 max, 312.17. He said, Tim.
Oh, okay, yeah. That's something you sent me earlier, wasn't it, as well?
I believe so.
Let me see, because I know you. There you go. Let me see if this comes up like this. Yep, there it is.
Tim was very upset he only won $200.
I know. This is one Tim was very upset that he only won $200. But now look, it's even fell down a little bit below, 59.32, right, at $172. Right, that's profit margin over a period of 2 days, 2.5 days, right? Because he had a couple losses down here towards the end. You can see there's never really more than 4 losses at a time, but when it happens, you're taking a big hit. This is just for today, 384, right? But after the stuff that's happened, you get about 4 losses in a row, you get to that point, what have you. All right, but he's trading through it. He's trading through his losses. This is him getting data. And you see, 59%. You could fall just under 60. Listen, you could fall under 60%. Because remember, what did I say? You need 56% to be successful. And he's trading 59%. Only made $172 for 2 days worth of work. You see, so that may not seem like a lot to some people. But listen, 73%. Okay, no, that's the wrong one. Here's Mike's. We look at Mike's live side, who got like $236 for 73%. So it's not too far off, right? On the amount of money each one. If you comprise per, per average digit as you go up with each digit, what does it reference into dollars from that point? And the difference between the two, it's not very much. They're really about the same amount. But it's about trading the program, surviving the drawdown. Remember
Exactly.
that. Surviving the drawdown. Now, why is this process for Tim, okay, when you look at this, why would he be trading this? It only has a success rate of about 60%. Why would you bother trading? There's a lot of trades. Well, that may be the type of trader he is that he wants to see a lot of trades on there because, yes, you will get these times that it'll draw down. But also you'll get times like this, that when it goes on and on and on and on for a win, then you get to draw down again, right? If you're looking at a chart, a success chart, remember what I said, you're looking at these real high spikes, okay? It's going to be doing stuff like that compared to 68.30 or 62.38, it kind of goes like this, right? Because after two trades, you're done for a little while, then you get to start winning, and you lose a couple, and you're gone for a little while. You see? Well, here, you win some big ones, and you lose a couple of big ones in a row. Then you win 4 or 5, and it really brings your money up. Now, are you still winning money? Absolutely. You're still growing the system. But your drawdown, usually about $200 in between, right? If you really look at it, and that's per contract. If you're doing 2 contracts, it'd be $400, right? If we go back over and we look at Tim's system, 1, 2, 3, 4, 4 times 5,600, so $56. So a little bit more than $200 at any one time on the drawdown side. But you can also have a nice size $200, $300 run, $400 run. There's a $400 run right there. You see where that's going? So yes, there's going to be at times you may end a day, you may be in the hole. But over the next day, you get that back plus some because you only need 2 trades for each one, right? So it doesn't take very much to get you back up there. And then if you look at it, the positive ROI over the last 3 days of $172 still may not seem like a lot. But guess what, folks? $172 right now with this kind of system, you add CVG, consistency plus volume equals goal. So once you get a consistent value, if he was doing 60 or 62 or 63%, how could he make more money? How could he make $340 in that same amount of time? Can anybody in the room tell me? Besides Tim H? Volume, that's right. The volume and amount of contracts that he does. Not the amount of trades he does, but the amount of contracts. And that's the toughest lesson for anybody to learn. Okay? So in housekeeping, we've covered the tally, we've covered the format on how it's supposed to be set up with each trade, we've covered doing extra sheets, when to start a new sheet. Okay, you can have it at 100 trades, you can have it, however you want to have it. Whichever one you want us to see first, always put in the first. And how do you do that? Very, very simple. I'm sorry to digress. I'm going back over to chart. Here we go. Just simply click on one and drag it. That's all it is. Click on and drag. It's that simple. Okay. So whatever one you have in the first line is the one we're going to see first when we first get to your name. Okay. All right. So let's get on to the next. Let's talk about this, and we're going to get over with this webinar very quickly here. When to go live. Now, this is a tough part. Most people are like, the demo system's different than the live system. You might be right, but guess what? It's where all that information is. In your head. In the system you trade. In the availability of trades that you get in, that's all in your head. You might have more losses on the live system than you have in demo because psychologically you're trading into the different mentality that it's real money. It might tweak you different with live money compared to demo. If you have not traded your demo like you would trade a live the entire time, if you're in there doing 5 contracts at a time and taking chances on trades and tweaking all this stuff. Well, let me see what happens if I close one eye and I throw a dart at the board. And if you're playing all these guessing games in demo, and you go to trade live, you're going to be lost. And you have to start trading with your demo account to a level of trades that you get so lost in just trading the process that wins or losses no longer affect you, just the positive ROI, the positive GSR at the end. Okay, it's the most successful part of a trader is when they go through the trades and they're not even looking at wins and losses anymore. They don't compound their efforts on a win or loss. Neither one excite or hurt them anymore. They're just trading the system. They look at the macro end. How much am I pulling off this month? Okay? So when to go live is when your GSR makes you feel good. Not me. There's no set level. I can't say 70. I can't say 80. I can't say 100%. I can only tell you when your gross success rate makes you feel good is when you should start looking to go live. That you have the consistency and your balance can handle the risk. Now, legally, Mike and I can't tell you how much to put into your account. But what I can tell you, what I've started with is about $800 in the account. Why? Because when I started with $800, I was trading an ATM. I was trading a in-the-money system of where I was doing for $20 profit. I was risking $80, right? So I was always telling myself I wanted to always risk about 10% of my balance at any one time. Okay, so in an ATM system, depending on what program you're going to be using, you got to do the math. If you're doing 6238, okay, and you want to do about 10% for one contract at a time, then you're going to need about $620 in there to cover that, right? Or maybe just a little more. Okay, give yourself a buffer in there. But we can't tell you exactly how much to put in. But if I was trading just that system, if you're trading the 45-55, how much would you put in at that point? Maybe you only want to trade 5% of your risk balance at that point. And at that point, you want to have about $1,100 in. See where that goes? Because that's your risk. Okay? So once you're to that point, once you're to a point where these things make you happy, the GSR there, your consistencies, you got your consistency going, you got the balance ready, you got your $2,000 or $3,000, whatever it's going to be, you got that all ready, you're about to hit the races. I want you to set a consult or send us an email or get us on the phone, do whatever you can for me or Mike to sit us down and say, I'm ready. Let us do a final check with you to see if you're ready. I mean, if we say, hey, we don't really think you're ready, you didn't really get a good GSR, you're doing 45%, what are you thinking? No, you're still all over the place, you haven't picked one way to do it yet. If you haven't followed some of those rules we'll give you our suggestion. You still go trade live, that's completely up to you, but your result's your result. Even if you had all those things perfect and we said go ahead and you failed, then it's still not our fault. Like Mike and I telling you to go do it, it's still your responsibility. Remember, risk disclaimer. But I want you to sit down with us because why? Because Mike's gone live, I've gone live, we're surviving those processes, we're doing well. So you need now to start associating yourself with those people, and you need to become that live agent as well. So if you've started to go live, you're ready to go live, I need you to start this process for us to get in, start talking to you, and get you on board with that. If you think you're ready, if you've done that work, if you got the GSR, if you got your housekeeping going, because remember, if you want to fail, don't do any one of these things. Don't train, don't try and demo, don't trade as live, don't keep a journal, don't go do those things. Your failure you'll be successful in failing. Trust me, you will be. But what do you have to lose by trying it all? By following that rule. You're going to follow the same thing that everybody else is doing, and the rest of us are getting success from it. Okay? Incremental crawl, I wanted to be able to go over this real quickly, Mike. And this is something Mike and I developed when we were putting everything together. I developed it and he kind of started running through it and tweaked some. This is the part where he came up and he even gave me a little trademark here with it. Do you want to go over this real quick, Mike?
Sure. Again, I can only tell you what I did originally when I started my live account. I started with $800. I traded with one contract until I got to 1,600, and then I also traded after the 1,600. I traded one contract or two contracts until I got to 2,400. And then I traded three contracts till I got to 3,200, and four contracts till I get to 4,000, and then five contracts after that. Again, then you say to yourself, well, when do I start taking out a profit? Well, right at, either a $4,000 mark or an $8,000 mark, either one of those you can take out a profit weekly, as long as you leave your $4,000 in, and as long as you're keeping your five contracts. One thing we didn't forget to tell you, but let's say you're going one contract and you get to your 1,600 and you lose the first two or three trades when you're in two contracts. We want you to drop down to the one contract again until you get to the 1,600, and this will save you a lot of money in the long run. Am I right on that, Max?
Absolutely, because once you get to, let's say if you do get to your 800 to 1,600, you do get to that, but you lose that next one and it brings you back down below 800. Don't suffer through another, because if you had another loss from that point, it would take you even further. Drop down the one contract and get it back up there. Get into the box further, right? So that's one big suggestion in there as well.
And you guys will have this in your box, so you can go back and either take a screenshot of it and leave it, and you'll have it all the time for yourselves. Again, this is just a suggestion, just what I used, but it's you fill in your money.
I think it's a useful suggestion, don't you?
Mm-hmm.
I think that's 45.56 there. I think that's a pretty damn useful suggestion.
Yep. So far, so good.
Okay. So now, one of the things that you might want to think about too is that when you start the incremental crawl, Mike was starting out with trading the MDM, and he was trading a whole bunch of other things. What I told him is that I wanted him to start over with the incremental crawl doing the 62.38, and that's what he's done now, and that's what was on this 5-minute this chart here for his live side. Is he started? If you notice that he's at one contract apiece at that point, and that's all because I told him to start back over, from this position of trading one at a time until we got over 800 in that position. And you're going to tell he's going to get there very quickly. And I'm very excited about it because you're going to be able to watch him be able to do this by following that live chart that's on there. So we're very excited about that. Great job, Mike.
Thank you.
All right. Final thought's going to be split up in a few things. News time. Mike, you wanted to come in and explain a couple of things about the news that you had noticed and what I've noticed and what you kind of said you want to talk to him about tonight. Why don't you go ahead and start with that?
Sure. And I'm guilty of this a lot of times, and we all are in the room. News time basically is for one bull trade or one bull of news, 15 minutes before, 15 minutes after, no trading. Okay. 2 or 3 bull news, no trading a half hour before and a half hour after. And we found that this is even the one bull. We used to say no, you can trade right through it. But Max, and thanks to you guys, we have all the data, and we've come to find out that we were going to avoid the for 15-minute time period on the one bull as well. So that's valuable because every time I lose something, the first thing I go is to check the news to see if I had my head down too long to see if I actually went through a news trading cycle. I still write it down. I still have a little timer on my phone when news comes up, and that's something you guys might want to do.
You can actually set these things up to be more about using your calendar when news is going to be there. Start setting in times when you can trade, not so much when you can't, but when you can trade, and that way it'll help set those rules into place for you. And that's what brings up the second part here, is that there is a set of rules in the system that we have. Now, I had it was a tab that was on DEX indicators, and they're still there, okay? Those times, like I said in there, were temporary, but you still must go to that rules tab if you're using indicators. What it is for the WB, I haven't yet set, okay? Because both systems are a little bit different. Now, the rules are really set around no news trading, follow the process like we told you here, one up, one down, or if you're using an ATM strategy from the center, or if you're using price level, whichever way you're going to trade, trade it just that way for 200 trades. If you're going to do that, if you want to test each one out to see what it's like, great. But follow those rules. Those rules are set there for a reason. We've learned a lot of mistakes from those rules. So if you don't use them and you follow those same mistakes, then that's just insanity, right? I want to finish tonight out by letting you all know that you're going to have to find your way. That finding your way is not so much about just throwing spaghetti against the wall and seeing what sticks. There is a method. There is a process. And Mike and I and a handful of other traders, a lot of other people have really worked hard to get to their level of success. Now, I feel I'm successful. I feel Mike's successful. Believe it or not, I really do think Tim H is successful with the strategy of the process, what he does. Whether or not he sees it yet or not, he is. He just has to tweak a few of those things in there in the mentality department to be able to get there. And that's okay, because that's going to happen with all of you. One day when some of you are looking back from this and you're saying, I remember when I was learning and going through the process, you can have a chuckle about it. But let me tell you, it's not going to be too far. Out of all the people that are in the network, we only have maybe 1 or 2 people that are not positive ROI, okay, over all the trades they're learning. They're not meant to be. Some people, it takes a couple of weeks to get to that point. Some people, they battle their first couple of days and they lose all this money and they're like, and then they're fighting back. And I let them do that for a little while. But some of you I've taken, once I see you get it, I will tell you to isolate those trades, put them on a new sheet, and start from there. Okay, remove those old trades out of the way because you're not trading that way. Don't fight against the grain. You've all learned a tremendous amount, and I'm proud of all of you. You're finding your way. Some of you 45, 55, some of you 62, 38, some of you price level, some of you ATM. Okay? You're going to have questions on it all. There's going to be a lot of things. So ask your questions in the chat rooms, get support on the line, get Mike into a consult, get myself into a consult. Okay? Share your spreadsheets with us. Remember, share only one. I'm sorry, but you're going to have to share only one. Okay? Because we can't keep putting them on every week. All right? At this time, I want to thank everybody for coming. We're going to have some short questions. We went way over, so I'm going to ask some real quick. Answer some real quick questions. If you have them, start writing them now in the room. If you're watching this after the fact, I want to thank you for being here and getting through this very long webinar. It's probably one of the longest I've done, but this was very special for all the members here that you follow these rules, follow these processes, and really start to make and find your own way through this solution. You're all a part of this company, and you've really worked hard. Mike, thank you so much for being here with us tonight as well.
Thank you, Max.
All right, everybody. I want to thank you again once for your time, and as always, trade well. I'm Max, and this is Dex, and we'll see you in the next video. We got questions and answers coming up next. Take care.